Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's talk about what is happening with this stock. And yeah, so with all that being said and done, as per usual, there's a little hair flying around, so I'm just going to get that out of the way. But as usual, if you enjoyed the video, don't forget to hit that like button, as it does help a lot. I do appreciate it quite a bit. Again, this is not financial advice. I'm not a financial advisor. And my membership section on YouTube is live. The link is down below. For just $3 a month, you get access to all my updates, posts, thoughts, technical analysis updates, order or options flow rather, which is a paid service, right? 25% off in the description. Cheddar Flow, check it out. But yeah, check it out. Also, link in the description for my membership section. Just $3 a month. Again, try to make it very reasonable. But nonetheless, let's just talk about Tesla. Closing the day, once again down. This time down 3.67% closing at pretty much $181 per share, which obviously compared to the market is, well, a bit of an underperformance where the market was kind of flat-ish, you know, slightly in the red, but nothing crazy. QQQ only down 0.14%. SPY only down 0.36%. Nothing too crazy. The bulls definitely stepped in, even for Tesla, honestly, at a certain level. But let's just talk about it. Now, before we dive into the technicals, because there is a lot to talk about, as per usual, as there always is, it feels like. I actually want to talk about options flow very quickly. So, interestingly enough, not necessarily about TSLA specifically, and I'll explain. So, quickly, I guess we'll talk about TSLA options flow. You can see it was all over the place. Today's option flow was pretty substantial, like a lot of option flow today on Tesla, all over the place. But one Tesla finally did go down to that, you know, pretty spooky level of about $175 or so. A lot of bullishness came in. You can see all of this bullishness rolled in pretty darn aggressively, and Tesla did finally rally back up well over, not well over, but over $180 per share. And then right before the market closed, we got a bit of more calls coming in on Tesla with some decent premium attached to them as well. So that's that, you know, whatever, right? The thing I want to look at that's kind of, in my opinion, a little more interesting is going to be this TSLL. You might be wondering, what is TSLL? Well, if you're not aware, there's more than one way to trade Tesla. You don't have to own specifically just Tesla. You can buy other things. For instance, in this case, you have TSLL. There's also another one, I believe it's TSLT, if I'm not mistaken. Yeah, this one. So this TSLT is, for instance, a 2 times long Tesla. So it's double the move of whatever Tesla's doing. So if Tesla's up 2%, this is probably going to be up about 4%. TSLL is a 1.5x. So same idea. If Tesla's up 1%, this should be up about 1.5%. Whatever. It's a bit more of a, you know, leveraged, if you will, almost. It's an extra bullish way of buying Tesla. Whatever. You get the point. The reason I'm bringing that up is because if we look at the options flow for TSLL, which is that 1.5 times Tesla movement, very bullish. Extremely bullish, I would even argue. In the morning, or pretty much when Tesla was, you know, pretty much plummeting, a lot of calls came in. 2.2 million, 1.1 million, 700K almost, 500K, 400K. And this is, again, options on an already aggressive version. Tesla's already volatile. This one is even more volatile. It's 50% more volatile than Tesla already is, and that's already volatile. And it's options on top of that. So, you know, to be fair, the options that did come in today, pretty much all the exact same strike, all the exact same date. All of them are 12.7 strike, except for one of them being 11.7, but pretty much all of them 12.7, and all of them expiring in a year, 2025 of January 17th. So just barely under a year, right? It is pretty far out, which, you know, makes sense. Again, it's a very volatile way to play it, but pretty damn bullish for something like this to come out. Again, we'll see how it plays out, but this is pretty promising. This is a good sign to see for Tesla bulls. Let me go double check one more time. I was playing Palantir earnings, and I want to see how it's doing. Up 12%, beautiful. I played it very cautiously. All I did was sell cash secured puts, but the fact that it's up is great. That means that money is pretty much free now. So let's talk about the technicals, right? Technicals are pretty important here as well, and we're in a pretty pivotal moment. So first, let's talk about what in the hell is happening. So today, obviously, we had a pretty substantial drop down, right? Tesla was down about like 6.5% or so at the lowest point in the day. Let's quickly double check. The lowest point in the day, why does this sometimes not work? Was down about, almost 7% on the day at the very lowest point, which is pretty substantial, right? Which ended up dropping all the way down to pretty much $175 per share, which is what I was telling my members. I don't remember where exactly it was, but I was talking about how, you know, and I was posting during this whole thing, right? I was posting during this whole drawdown. I'm not like scared. I'm not going to be like, oh my God, I'm not going to post because it's so scared. No, I want to do that exactly. And if 180 breaks, expect 176 next. We went to 175, right? So what does this mean? First and foremost, we came down to important level and we bounced, more importantly, off of that important level. What is this important level? Two reasons, or two things. First is this red line. This is the red line that is the bottom of the channel of the massive overall channel that we are in, that we've been pretty much zigzagging ever since we topped out and pretty much started creating this channel back in July of last year. So we've been here for like a nice solid 6 months, just pretty much slowly trending downwards, potentially. And I know this may sound crazy. I know some people might kind of roll their eyes and be like, what are you talking about? This potentially, again, potentially, can still be a massive, massive bull flag. Why is that? Well, plain and simple, if we talk about this bull flag, so we had this massive drop down, and then from here we had a massive rally, right? This is a small bull flag within this, a larger picture, but essentially, if you look at it like this from this level of about $100 per share, if you go all the way to the top, is the pull, right? So that's the pull. And this, of course, right here is going to be the bull flag. Now, why is this still a valid bull flag? Because don't forget, bull flags, that's just how they form, right? They form while pretty much zigzagging either sideways or downwards, right? That's just how bull flags form, if you're not aware, right? This is how a bull flag forms. You have a massive rally, you zigzag downwards, you're pretty much making literally this movement right here before a breakout. We are right here right now, the very bottom, right? You can see usually it's 3 touch points at the bottom, right? 1, 2, 3, 4, 5, 6, and then 7 you break out. Sometimes it's 5, but in this case, you know, it's pretty common for it to be 7, right? We're on the 6th touch point, which is technically should be the final touch point of the bottom of the flag, or the channel, whatever you want to call it, right? Which is where we're in right now. And again, another way to justify it, to make sure that this is still valid and this has not breached the limitations of what can be considered still a bull flag, at least in my view, is going to be something like this. All you do is take the Fibonacci, draw from the swing low to the swing high, pretty much from where the bull flag started to where the bull flag pull stopped. In this case, you can see right here, right? We have it like this. And you can see a very, very, very important level. The 618 Fibonacci level is exactly where we bounced off today, right? The 176. We've been talking about this level many, many times, and that's exactly where we came down to today. That's exactly where we bounced off. And more importantly, in my opinion, at least for now, we'll see how we follow through tomorrow. We held 180. We went back above 180 and held it. That's really, really important. Now, obviously, with all things being said and done, this can, of course, still fall apart. Nothing is guaranteed to work out here. This bull flag can still falter, and we definitely can go lower. But at least as it stands, as of this day and as of right now, this potential bull flag here is still valid because we're holding the 618 level. To me, that's the last level though. However, if we do drop below the 618 level Fibonacci and especially start turning into a resistance, then this bull flag is most likely void. It's most likely no longer a thing. Tesla most likely gets even more bearish. And on top of that, in my opinion, it'll take even longer for Tesla to really break out to anything really worth meaningful or any meaningful number, right? Pretty much well back into 200s. If we lose that Fibonacci level of the 618 level, which is again about that 176, give or take, of course. I'm not drawn to perfection here, but just a rough idea. So that's the way I look at it. So far, we're holding, and so far, it's looking good. So that's a nice sign, which is essentially this massive bull flag that you can see right here with the 2 channels, the top and the bottom channel. That's good. We held that. Very, very important. So tested it and held it. Beautiful. Good start. We also have a nice looking bullish divergence. Even when we were all the way down at the very bottom around 175, this bullish divergence was still extremely obvious. Like, it was pretty much looking almost the exact same as it does even right now after this massive rally. Because don't forget, the RSI on the daily in this case, the position on the RSI is relative to where the candle closed, right? So this RSI is not going to show the move that went to the downwards at 175. Right now, the RSI being at this level is relative to where the candle closed, which is essentially 181. So just keep that in mind. Important to understand. But the point I'm trying to make here is, well, as we did essentially still do overall lower lows, which even today's close is still technically a lower low than this low down over here. Very, very, very painfully obvious higher low on the RSI. Daily bullish divergence, one of my personal favorite things to see. Very nice to see that. On top of that, we also have, of course, what looks to be a nice looking hammer candle. Not the best looking hammer candle, and the only reason it's not the best looking hammer candle is because it's red. I personally like to see white or green, and my chart shows white as green, and I don't know why it just does, but whatever. It looks kind of clean on the black background in my opinion. But I'd want to see like a white or green candle, right? That would be the most ideal. Like if this candle was closed green and it was a green or white candle, beautiful. I would be very convinced the bottom is in and the rally begins pretty much tomorrow. Unfortunately, it's a red one. So still good, still overall a net positive for the bulls and still more bullish than bearish. Absolutely, there's no question asked about that. However, not as convincing as, of course, a green or white candle. Keep that in mind. Hammer candles at the bottom of downtrend are one of my favorite things to play. For instance, I did it on Google, right? I'm playing Google right now, and so far, look how beautiful it looks, right? Same with Google. Massive downtrend post earnings, nice looking hammer candle, and it continued to rally so far, which is good to see. And that's kind of what Tesla is trying to set up over here, though unfortunately, again, like I said, it's a red hammer candle. Still good, just a little bit less convincing than, like I said, a green or white hammer candles. So that's the main thing I'm looking at right now. RSI, again, bullish divergence. MACD is starting to, still kind of moving downwards, but it's slowing down. It's starting to finally look to potentially start to curl up again, which is going to be important to understand. So where do we go from here, right? How do we confirm a breakout? Well, there's two ways to confirm a breakout from this level, in my opinion. The first level, that's going to be probably the more important one, maybe not more important, but just really start things off, in my opinion, is going to be a break above this downward trend, which is this yellow line right here. As long as this yellow line gets broken, well, we're, potentially we're game. Like we're ready to start playing for that potential reversal on its way, right? Tomorrow, pretty much the level to break to really get out of this is going to be today's high roughly, which is going to be about 185 to be safe-ish per share. If we can go above 185-ish per share, let's say tomorrow, for instance, and again, dropping every single day, but tomorrow, 185, I think, it's looking good. We're looking like we're finally breaking out, because every single time we have come up to this yellow line over here to pretty much test it and maybe even look to break out, some news has always dropped us. And once again, it happened pretty much from Friday to today. We were very close. All we need to do is pretty much open flat, really, slightly green, and it would have been looking pretty promising already from that. Unfortunately, another massive gap down and a massive sell-off. It just happens every single time. At some point, of course, it needs to end, but who knows when. This might be the time though. We'll see. So that's the step number one. We want to break above this downward trend line. And that's the first step. The second step, also very important, is to break above about 195. That was a support level from back here that we dropped and then bounced off of, and pretty successfully as well. Had a beautiful bounce from here. That's number one. Number two, it's also important because we want to break the high that we set up pretty much ever since this little, situation that we find ourselves in down over here, right? If we can break above this candle's high, which is again about that 185-ish level, that's going to be important because now we are officially, it's even more convincing that we broke out of this downtrend. Those are the pretty much most important two things I'll be looking at right now. Break above 185 to break the yellow downtrend, which is very steep, that we've been in since 265 or whatever it was. And of course, even more convincingly, to break and hold above 195. As long as those two levels are met, I think the bottom is in, and I think we're definitely going to be looking for a nice little rally from there. Now, the question, of course, also lies, well, how high do we even rally? Like I said many times, my first level is going to be simply the gap fill for earnings, which is about 210. I think we'll go past that though. The next level for that will be a retest of the downward trend lines, right? Which is going to be putting us somewhere around 219-ish per share, which is also where the 200 moving average is on the weekly. And above that, I think we go up to somewhere about the 200 moving average on the daily, which is about $230 per share. Those are the main levels I'll be looking at, with, again, the 21 EMA over here meeting us somewhere around the gap fill for earnings as well. So we'll see how that ends up, resisting us potentially as well. But if we can go back above the 21 EMA and start holding above that on the daily as well, that would be phenomenal. That is what I would want to see. And as you can see on top of that, as the MACD, as we have kept going lower, the MACD has, started curling. The red bars are getting smaller, and smaller. So that's a nice sign to see as well. But with all that being said and done, ladies and gentlemen, that's it for this video. Let me know what you think down below. And as per usual, I'll see you tomorrow. Peace.